Hi, welcome to the Market Alert for Friday, the 22nd of December 2017. So the last one for this week, but not the last one for this year. I'll continue to do updates through the Christmas period. Probably from Wednesday of next week, I would have thought. We've got Monday, obviously, Christmas across the board. The US returns on Tuesday, no Boxing Day for them. So we're probably Wednesday. We'll see what's going on and take a view accordingly. So yesterday the pound really quiet. Market moved higher and then obviously just moved back. Didn't even do any great shakes. There was a bit of an activity around this time. I was sitting there watching it. All of a sudden the pound started dropping quite sharply. But you can see how they brought it back here. And then it's been like this really on most of the Asian session there, just sideways. In the daily chart, sideways it is, very, very quiet. Again, you'd expect that as we go into the festivities over the next weekend and the next few days. And news, what have we got? Nothing really to shout about here. Final GDP, current account, core price, personal spending, nothing to move the markets at all. And then we've got core durable goods revised, sentiment and new home sales, and that's the last two are out at 3 p.m. but I would expect it to be fairly quiet. Of course, they're going to endeavour during the festivities when the markets are fairly thin to move the Dow up to that 25,000 level, as they've not achieved it yet. I say yet because obviously they've got today to do it. Yesterday there was some selling around again from the off. I managed to buy this back, but they had another go at it before the selling disappeared and then moved the market higher. And then it was a case of sideways throughout and then back down just after the close there, and then sideways to higher on the overnight. Notice that the market is currently putting in lower highs, needs to drive through this in order to move higher. You'll also see there as well that we've got the market struggling with the 76% retracement as well. On both occasions the market's come to this point and has hit a brick wall so far, so it needs to drive through this in order to move higher. Right, let's have a quick look at the implied volatility. There's not a lot to report on this either. The market currently at, well, if I actually add this in, it would be useful, wouldn't it? Add in the data point there. It's just have a bit of a clear up. Usually do this before I record, but I'll just do that now, just reduces any confusion. 850 to 884 there, as you would expect with slight indecision in the market. Right, and then before we finish, let's have a quick look at Bitcoin. Some interesting things happening there at the moment. Bitcoin down off the highs of 20,000. You can see there you've got the 20,000 level, all the way down to 13,000, the 76% retracement. Drawn in another one. As you'll know from the market alert, if the market breaks the first fib retracement I put in, then I just keep rolling down on these dips, daily lows, and then you'll find the area of support. And at the moment it appears to be the 13,607. I would imagine the market's actually been down to a low there. What's the low on this? 12,712 actually. I thought it would have been down to 13,000, but it's certainly broken that. So one hell of a pullback on this at the moment. And ETX, you think, oh well, things might improve and we'll get a drop in the spread, but no chance, as you can see there. 193 point spread at the moment, and then when you scale this down and look at in the smaller time frames, 30 minutes, you can see there that it's a fair old spread on this. So again, it's not tradable at the moment because of the amount of spread on that. It's a shame, really, because a month ago it was 25 points, and that seemed wide at the time compared to obviously the pound and everywhere else where it's only just 1 point or less than that. But it is what it is at the moment. So because of the increased volatility as the market is pulling back, then it's they see that it's got to increase it as opposed to decrease it. There's no doubt that they've been shafted on this one as the markets move sharply, particularly over the weekends when about 3 weekends ago when the Bitcoin put on 2,000 over the weekend, and then they came in, and that's when it was 25 points, and then they started widening the spreads. They've got to get the money back somehow, and one way of doing that is to increase the spread. It seems counterintuitive to me because it's stopping anybody from actually trading it, I suppose is the idea in a sense. Having been caught with the pants down, nobody wants to short it. Even with these pullbacks, I mean, this is perfectly normal. The pullbacks here, we get move to the upside, pull back, move to the upside, and then the same will be off this one as well. You'll be able to project up to the next target off this once the market has found some support. And don't forget, going into Christmas as well, we're going to see this market continue to trade, even though the traders are missing from the CME and the CBOE. So it's going to be interesting to see what happens over the next few days. Obviously, it's a first that it's happened. Obviously, Bitcoin's traded every Christmas since its inception. However, obviously now it's become a part of most people's or traders' lives. They're aware of it. It's going to be interesting to see what happens when the rest of the world is closed, and not just closed for the weekend, over the next few days. So is this the pullback before they then ramp it higher? Who knows? And probably again one of the reasons why ETX and all the other spread betting firms have widened the spreads as well. Stop people getting in so they don't get indigestion from the turkey lunches, just in case it does move rapidly back to the upside, which I'm sure it will throughout 2018 as well. I think this has got a lot further to go. Any major pullbacks in this will certainly be an opportunity. But again, the FOMOs, the fear of missing out brigade, certainly those that have remortgaged, which is foolhardy and financial suicide, will be feeling the pain if they've bought in at this level. You never buy a market unless you get a major pullback, and this is a major pullback in the making here at the moment. And again, if you trade the markets, you can trade these things knowing, having discipline to sit on your hands and wait. I mean, in the early 90s, when you had no internet and you had to phone the brokers to place an order, I always some sound advice I received from the brokers I used in California, who said that if you have the temptation to want to get into a trade and it's not right, then the best thing to do is to open the desk drawer, put your dialing finger in it and slam it, because that takes your attention away from wanting to get in. Of course, it's too easy now. Of course, it's just a few mouse clicks and you can be in and losing money very quickly. You have the patience to sit and wait for these sorts of pullbacks. Right, that will do it for today and for this week. And just leaves me to wish you all the very best for the festivities. I hope you have a good one. Also, take this opportunity to thank you for listening to me over the last 12 months. Very, very much appreciated. Love the continued support. And like I say, it is really, really appreciated. So thank you. Have a good one. And with that, as ever, thanks for watching. See you in the next one.